Hello everyone, I'm Rakshith Pai and in this video I'll talk about Mr. Prashant Jain of HDFC Mutual Fund and his investment philosophy. How we the retail investors can invest like Prashant Jain. What can we learn from world's longest serving and one of the best fund managers. So let's get started. Prashant Jain sir is one of the world's longest serving mutual fund manager with over 31 years of service. He headed HDFC Mutual Fund and his track record is extremely good. HDFC Mutual Fund investors can back me on this. Mention your investment journey with HDFC Fund in the comment section. So why did Prashant sir perform so well throughout his tenure, especially during the ups and downs of dot-com bubble, the housing crisis and the recent one, the COVID crash? Here are my top 5 learnings from Prashant sir investment philosophy. Number 1, value investing. There is no doubt that Prashant sir's investment philosophy was value driven. He was a staunch value investor. In fact, some of the biggest names in the industry are value investors. Value investing in simple terms mean investing in those companies that are worth more than what they are offered to us. So basically buying something at a lesser price than what it's actually worth. Check this article to know more about value investing. Link in the description. Number 2, earnings. Prashant Sir says, and I quote, "The market in the long term are a slave to earnings." In fact, it's this philosophy that made him pull out his fund's investment in the IT sector at the peak of IT bubble and from the infra sector at the peak of the housing crisis. Follow the earnings and you get it. A company's stock price is like a shadow of a man whose name is Mr. Earnings. There is no way you can make money from your investment if the company you are investing isn't making money. Number 3, value and growth. Prashant sir is very cautious with what he pays. He seeks value in each and every one of his investments, but he invests only if there is growth aspect in the venture. Value investing without growth in it is like planting and nurturing a beautiful sapling that doesn't grow at all. Forget about yielding fruits. For example, we have many PSU companies that are extremely cheap in terms of valuation. But where's the growth? They look cute and all, but they don't grow. Number 4, opportunistic. One word description of Prashant Ji would be that he is opportunistic. Trust me on this. A fund manager has to be opportunistic. Prashant Ji was amongst the very few to get in and out of IT sector before it went bust. He got out very tactfully and at the right time. Similarly, he took full benefit of the 2003 to 2007 infra bull market and again he timed his exit exceptionally well. He was also an expert in balancing his portfolio. Number 5, high conviction. Conviction is something we all need to learn from Prashant sir. Since his investment philosophy forces him to follow value investing, which means he can't pay more for the company's stock, and that at times get troublesome because when you are handling crores of worth of investors' money, you can't be cash idle. But he did what was required. In fact, he says, and I quote, "One should not sacrifice investment principles just because you cannot achieve desired returns." No one has achieved anything meaningful without undergoing periods of underperformance in their career. That's high conviction. All the mentioned philosophies that Prashant Ji follows are something that's known to each and every one of us. It's simple and straightforward, right? But how many of us follow them? If Prashant sir can follow the set philosophies and give exceptional return with his fund that are worth over 1 trillion rupees, trust on it. We can also do the same with our retail portfolio. That's about it. If you like our video, don't forget to share, subscribe to the channel. And don't forget to check the link in the description. Thank you for watching.